Matt,
Rich.
Money Matters, episode 17.
8.
18.
18.
Man, time's
like
flying.
that. Yeah.
Time's flying.
Time flies when you have fun.
Money Matters with Matt and Rich here today. We're going to jump right into it. We've got a loan processor. So it's going to be a very mortgage-friendly, sort of mortgage, what's going on type of episode today. We'll hear it from your side. I think this is great for a lot of first-time buyers, buyers and sellers in general, kind of like behind the scenes, what's going on.
Yeah.
Just touch on that. And we've got an awesome guest that is, like, you want her on your side. If you can gain her friendship, like, she's the one you want on your side through anything, not just mortgages.
Oh, yeah.
Like anything.
Anything in life.
Yeah, Krysta is awesome. She's the best. Matt, you've worked with her, and you kind of know the process. So I'll kind of let you take some of the heat here.
Yeah. So Krysta is a processor wears a lot of hats here at PML. She does a lot on our processing end. So we're going to really dive into what happens after you get under contract. And if you're lucky enough to have Krysta as your processor, what exactly she's doing, how she's communicating, all that stuff. So hi, Krysta. Thank you for joining.
Thanks. You guys are super kind with your kind words. I appreciate that.
We try.
Yeah, no, it was great. I'm kind of talk you through what happens on my end once the loan gets submitted. So
quickly, how long have you been with us for? I forget. Was it 2 years? 3 years?
Over 2 years. Right. Yeah. I started like right in the middle of the pandemic, and I actually worked with Rich before that.
You guys stole her from me, which I told her when we first met. I said, you're going to get picked up. Like, you're a savage. You do like phenomenal work. There were agents that reached out to her and said, hey, do you want to do more work? Do you want to do that? Like, for me, like, this is awesome. You're the best. But no, she's like phenomenal. Happy to have her for the little bit that I used you for, and I appreciate your work there. And then get picked up and do some good stuff.
Yeah.
These guys are premier.
Gotcha. So let's start with, buyer gets the offer accepted. Everyone's happy, especially first-time home buyers. They always ask us, what to expect from here. I kind of give them the rundown a little bit. But from your perspective, right? So after I, clean the file up, submit the loan, what's the first thing you're doing once you get that file?
Yeah, so once the LO gets the file cleaned up and has everything that they need, it actually goes to our setup team. So one thing that I've noticed about PML versus like a lot of other lenders, and that's just yes, I have worked with another like mortgage company before, so I can have the comparison.
Yep.
Yeah, so it goes to like our setup team, and what they do is they set it up in the system and send out initial disclosures. So the person who's sending those initial disclosures isn't necessarily going to be the person that you work with the entire time. They're essentially just a setup person, and so they just get it in, get it locked, get disclosures out, and then from there it goes to our processing team.
Perfect.
Situationally, yep. Just, once it comes to us, then we kind of take it and from there.
Perfect. Yeah. So it's important to note, like, during that step, that's when your rate's locked. That's when, everything gets finalized there. And then the disclosures is just a massive government packet that is full of 90% of repeating itself. And you're probably not going to understand it anyway.
CYA stuff?
Yeah, pretty much.
Yeah.
I get
the most important part of that packet, though, is probably the loan estimate, because that's where you're going to break down all the fees and show like your estimated cash to close. And that's usually, if borrowers are looking very closely at that, they'll like either get wide-eyed and have like, this like shock, or they'll just be like, okay, yeah, that looks about what my loan officer said. And that it should be, that's what my loan officer said it would be about, because if they're setting up the loan properly, it should all align pretty well.
Right. And that's what working with Matt at Premier and working with him can do is he's going to get that accuracy so that it isn't a big surprise.
Right, exactly. Because I feel like the one where I get the most questions on is that loan estimate, just understanding the fees that are broken down in there. A lot of this is kind of nitpicking, but like condos, like the HOA isn't in the mortgage, so they're why is that separate? You're walking through that, but that's definitely the most important one. So it's a massive packet, but we put it the government puts it first, so they have your attention for that one, and then they just spew nonsense to you. But all right, so once it's due setup, once the disclosures are signed, what happens from there?
Yeah, so then it gets sent to processing. So, what we do when we get the file on the processing side is we order the appraisal if it's necessary. That's something we want to do first and foremost. And then I personally, kind of just speaking from what I do, I do like a very thorough audit of the file. So I review like a pre-underwrite. I know what the underwriters are looking for. I'll try to get ahead of any of those. I'll reach out, introduce myself to the borrower, let them know like, hey, I'm going to be your processor. I'm going to be submitting everything to underwriting. I'll be in touch. If there's anything that I feel like we need before we submit to underwriting. So what's really important is to have like 3 key things in order to get the closing disclosure out. So a lot of people get really confused, like, well, loan estimate, closing disclosure, what are these things? So there's a guideline. They call it a TRID guideline. I'm not going to get into like the legal terms, but that closing disclosure has to go out at least 3 days prior to closing in order for us to close. So our goal as processing is to get that CD out as soon as possible so that there is no hang up at closing. So we want to make sure we have some type of homeowner's insurance so that they can verify that. Some type of appraised value. So our lenders, most of our lenders will use just the purchase price of the P&S. So that's perfect. And then taxes. So what we'll do is we'll go pull the tax bill online, or we have like a system that will like show the estimated taxes so that we can get that closing disclosure out initially. So I want to make sure that we have all of those things. If there's anything missing that I need from the borrower, I'll reach out at that point. And then it gets submitted to underwriting. So our underwriting process is a couple days at the very most. Sometimes it's hours. So it just kind of depends on the type of loan, government loan, VA, FHA, conventional, with like the underwriters. The time of the month really matters with, stuff like that.
And just what lender, obviously.
Yeah.
Yes, exactly.
Yeah. So what I'm hearing is there's a lot of moving pieces, and to keep all those going, like, Krysta, you need to be doing your thing. Matt, you need to be doing your thing. But like something, the buyer, if there's stuff that needs to be requested from the buyer to get these things in motion, that buyer needs to jump on it so that everything can, timeline wise work. You can't take 3 or 4 days from a buyer perspective to respond to something like that because it's kind of holding up. Because I've seen it from some random VA lender where like closing disclosure went out like the morning we were sitting in the closing.
Oh my God.
We were sitting in the closing at 9 a.m.
Well, close at that point where you shouldn't have been able to.
Well, we did. Things just were a little, money changed hands a little bit later, but I guess money changed hands on paper a little bit later. But so it was necessarily no fault of the buyer, but the random VA lender was a little lacking, and they didn't have Krysta on the team.
I feel like I know what VA lender this was, but
some national broker.
But that's a conversation that I especially have up front, so that way the buyers and my processing team is not set up to fail on that end in terms of getting things. Is especially if it's a 20-day closing, 21-day closing, something really really fast like that. It's right up front. Hey, you need to be on top of this because the only thing that's going to delay this is you, because our team's going to be ready to go, and the lender's going to be like, we're going to be ready to go. So it's just setting that expectation up front. So when Krysta reaches out and says, hey, we need X, Y, and Z, they understand, okay, I need to get it to her like now, not in 7 days.
Yeah, exactly.
Yeah. And
go ahead.
I was to say, typically, I try to reach out to the borrower as minimal as possible for needs. So for me, I'm like 1 or 2 touches with the borrower is like the max of my expectations for max. I don't want to get borrower burnout where I'm just like constantly going back to them being like, oh, I need this. Oh, wait, now I need this. So when I get all the documents, that's why I do a thorough review. If there's anything that sticks out, I'll address it with them right away, tell them that we may possibly need this, kind of set that expectation that, hey, I've seen this before, that the underwriters may want this. So we might possibly need it. Don't worry about getting it now, but I just want to put it in the back of your mind that it's a possibility.
Yeah. So having someone on your team, Matt, to kind of hit what Krysta just said, that can plan those things that you might have to see. That way, it's not playing a game of catch up. Like, oh crap, I should have. I didn't know they were going to look for this.
Right.
Having someone that's like, all right, you know what, these couple items, probably will come up. If you can just get them to me now, we'll be good.
Right.
And if we don't need them, we don't need them. But like, let's get it done.
Right.
That way, there's not like last minute stuff. And now buyers are like, holy crap, I'm supposed to close in 4 days, but now I'm doing all this stuff.
Yeah, yeah. Or even just an understanding of, when Krysta gets docs, say she gets a bank statement and she sees a large deposit on it, she's going to jump ahead of that and say, hey, we're going to need to source where this came from. So instead of just sending this in and waiting for it, like, let's just do it now. So understanding the documents that she's getting and knowing, okay, what is this supposed to look like? Does it look like that? And then if not, what do we need outside? So we're not going back and forth with underwriting 6, 7, 8 times. And like she said, the borrower just gets burnt out and they're like, they don't want to hear from us anymore. Their experience isn't great, and obviously it doesn't reflect well on anybody.
Well, and like, that's the thing. Like that's why Krysta's a savage and you're great, Matt, because like, you're proactive.
Yeah.
Right? Like, just a little proactivity. Get ahead of it and be done with it.
Right.
But you have to be. And that's what sets aside like a good lender from a not so good lender is the experience and knowing, what to ask for, when to reach out to the borrower, when you can just get stuff on your own. Like there are certain things that I'm like, hey, let me reach out to your financial advisor if we need to get something with an IRA. Let me reach out to your homeowner's insurance agent. You just give me the information and I will do the legwork for you, because that is super important. Now, if it's easier for them to get it and they're like, oh no, here it is, great. But like also borrowers are busy. They work, they do things. Like my job is to work for them. So like if I can do something to help out, I'm going to do it.
Right. And like,
regardless of how long it'll take.
And that's why they're working with you guys, and myself. It's like, no, you're working 9 to 5, Monday through Friday. I'm working 9 to 5, Monday through Friday to get you where you're going.
Right.
I can, just give me your insurance guy's email and I'll take care of it.
Right. Right. Because it really doesn't take, like, for stuff like that, a lot of it is like, for the borrower, it's an inconvenience to take 20, 30 minutes out of their day. But for us, it's just our job.
Right.
So like we would rather do that. And again, it reflects well on everyone. Because like I always, I think we've chatted about it. Like we're a reflection off you. If we don't do well, for some reason, the buyer's like, oh, my agent sucked. It's like, no, that's not the case.
It happens.
So like if we can be a well-oiled machine, like that's just what takes everything off. Loan gets submitted to underwriting, conditions come out, Krysta. You get those conditions, put them back in. Is there ever a time in which, more conditions pop out? And is that, should buyers be freaking out if that happens, just that type of stuff?
Yes. I mean, we're all human, right? The underwriters are human. There's human error. Things get missed. Yep. A different underwriter might touch the file and see something and something will come out. And in that situation, you just got to do what you can do to get the file closed. So we just reach out to the borrower and be like, hey, this was missed by the underwriter. I'm really sorry for the inconvenience, but can you please send me this statement or this document or whatever it is? It is what it is. They want to get a house. Our goal is to close it for them. So yes, human error on the underwriting side does happen.
Right.
So, and it stinks when it does because like you want to have as smooth as process as you can and catch everything that you can, but it's not 100% like flawless. Right. There are little hiccups that happen.
Well, and like I tell most buyers and sellers, I'm like, hey, there will be bumps along the way. My job and my goal is to smooth out those bumps when they do arise. Like there will be little bumps. There's just the way it goes.
Right.
When you've got so many working, pieces in this puzzle.
Right. Right.
But let's smooth them out and make them less bumpy.
Right. Right.
Rigid.
But I think that's also really what separates just our processing team apart in general is the fact that we expect to reach out to the borrowers, that initial time for the documents. Okay, maybe another, 1 or 2 if you got to nudge them a little bit. But that first set of documents that we get back in, we have the expectation that is all we'll need. We're not expecting like maybe other lenders or a ton of banks out there where, okay, yeah, we need X, Y, and Z. And then, oh, wait, no, now after that, we need 5 things. And oh, crap, no, now we need 2 more things. Like we just get it all up front and get it all out of the way. And our processing team is experienced enough and just intelligent enough, honestly, to be able to look at what you're giving them and know if anything's going to pop up from there.
Yeah, it helps expedite that process, right? Like you said, a 21-day close, you need it all up front.
Right.
Even a 30-day, it's like, well, just get it all up front.
Right.
That way, if any bump does arise, it's a nothing issue.
Yeah.
Because you've got everything else you need.
Right. Right. Krysta, tell us about experiences with maybe borrowers that, weren't weren't as cooperative, and how you kind of handle that from your end. And when I say cooperative, there is a 21-day close, but they're just not getting back to you. Like, what is kind of
come on, let's get into
what
it.
is I don't want to say protocol, but what's kind of your system when that does happen?
Well, I always try to if I can tell that the borrowers, you can tell. Like, I can tell if a borrower is going to be difficult, or if a borrower is going to be like, oh, here's like my whole life, I'm just going to send it all to you. And so when a borrower is a little more hesitant to send me things, I give them a deadline.
Right.
So I say, can you get this to me by end of day Monday? Just within a relative time frame.
Right.
To be able to hit commitment and all of that. And I just follow up almost every day until just say, hey, if I don't hear back from them, I'll say, hey, just want to make sure you got my email. I'll text them. I'll call them. If for some reason I can't get a response from them, I'll loop in their agent.
Right.
So usually with the agent is when I come in and I'm like, hey, I need this from the borrower and they're not, being responsive. Can you help give them a little nudge?
Right. Right. So at least if the agent's now reaching out to the borrower, they see how much of an urgency it actually is.
Yes.
And usually that does help. So that is good to know.
Super helpful.
So please get back to your processor when they're reaching out to you. Please just get back to her.
I mean, we're handling, if you think about it, at any given time, 50 to 70 loans in a time frame, right? Mm-hmm. So we want to be able to work on a file, get what we need to done and get what we need to get done and move on to the next one. And if we're not getting done what we need with that one, we're spending so much time on it when there are other borrowers that need our attention and help. So it's just a time thing.
Right. Yeah. No, this is
awesome. I think we're coming to the end here. Krysta, thank you so much. I think this is going to be super helpful for those people that are wondering what the heck goes on. Me and Matt will let you go, and we will jump together, and we'll continue chatting a little bit behind your backs, Krysta.
Oh, perfect. Yeah, I mean, we didn't even get to the important part, which was the clear to close. That's the most exciting thing. But man, you guys can talk about that.
I was gonna say we can chat about that. We're just running out of time on the
I know
on the Zoom, but I'm sure we'll be giving you a call after. So thank you very much.
Thank you, Krysta.
Good. Thanks, guys. Appreciate it.
Bye.
All right, bye.
Well, that was awesome.
Yeah. Super
I think that was super helpful.
Just from the processing end, just understanding, what is actually happening from their side of things, how, just understanding the urgency sometimes that it takes, and understanding the side, especially as a first-time home buyer, what to expect from there, what happens after you get under contract. It's normal for a processor to actually reach out to you ahead of time before you get into underwriting, especially on our side. That is kind of the PML secret, I guess you could say, is our processing team understands what we need and understands when you get a doc. Okay, let's dissect it. Is there anything in here that underwriters are going to point out? If so, let's just get it now. Yeah. And then we'll submit everything in. Not we got one document, send it in underwriting. Oh, we got another one, send it. It's like a batch order, essentially.
Right. And I think, maybe maybe the buyers and sellers, they're perceiving that, you're doing all of that, where, how could you, right?
There are people that do. That's the crazy part, is there are companies that don't have, a Krysta or a processing team set up. So the LO has to process everything themselves as well.
So doing all these pieces, how can you be specialize in any of those pieces?
Right.
And do a great job.
At it. Right? That's it.
You might be able to do a decent job, but you don't want a decent job with this stuff. You want a great job.
You want a great job.
That's why PML is the greatest, right? It's the back end support, it's the front end teams, it's all of that stuff. You walk into the office and you've got someone greeting you, all the way back to the people that you don't ever get to see, the Krysta and everything like that, underwriters and things.
Right, exactly. And those are the people behind the scenes, like you said. No one really gets to see them, but they're the what would it be they're the people keeping the ship afloat, right? Yeah. They're the ones that are actually holding us all together and allowing us to do what we do. Right, and it's something where I haven't worked at another mortgage company, but I've heard of other people that have come in here that have worked for them. They're telling me the stories of the difference, and it's just night and day. Just the amount that we can get done in a day as LOs versus, when they were at their companies and they could barely get a quarter of what we can now get done. Right. It's just so big. Like I can actually focus on, having conversations with borrowers in depth about their options versus just, oh no, okay, I gotta get homeowners insurance with somebody. Move. Like, get off the phone.
Exactly. Well, and providing the communication, like you just said, like being able to have that communication so that the buyer knows what's going on.
Yeah.
All these back ends, Krysta's and everybody else allows you to do that.
Yeah.
So it's not like, I don't have time to talk right now because of this. I'm like, oh, well.
Right. Sorry, I'm on hold with the bank, or I'm on hold with someone else because I have to go get this. Like,
what was that piece that you wanted to ask Krysta before we had to cut out there?
What was it?
What, underwriting? What were you saying?
Was she talking about the clue to close? Was that what?
Yeah.
Yeah. So I'm assuming what she was going to be talking about was, underwriting goes through. It's now your loan's clear to close. And all that means is that the underwriters have determined that your loan is fine, like you qualify. That's like the big, celebration. And then from there, it goes to our closing department, which is technically still part of our processing team. So I don't even handle the closing department, which some LOs do have to handle. And that's when that department and title or the attorney are going back and forth to solidify numbers, matching invoices, making sure that you're not overpaying for things, making sure you're not underpaying for things, right? So that way, the final number. When you get that final number from the title company or the attorney, we have gone back and forth to make sure that everything is dialed in. Again, to make sure you're not overpaying and to make sure that we don't have to eat anything because we didn't charge something that we were supposed to charge. That's a crucial step where a lot of buyers will ask me or ask our processors, hey, what's the final number? When can I expect the check? Like, when can I do all that? It's all title at that point, right? The title company needs to be on top of it to say, okay, we got to enter their portal. Here's our fees. We do our job, enter our fees, and then everything just balances out.
I think that's probably another crucial, critical personality to come talk to everybody about in the real estate world. Buyers, sellers, having a title company in here to just go over their process, go over their side of things.
Yeah, I think that'd be pretty sweet.
Yeah, like, we've got obviously lending in the real estate,
right?
Home shopping, that squared away here. We've got Krysta, title.
Oh, even like you said, understanding title's process, but then also, what happens day of closing, what to expect day of closing, what is title insurance, what does that mean, like, and understanding, like, hey, this is why you want it, because everyone should have it, right? But it's not just like a fee that's just thrown in there that goes into the abyss. Like, let's give some examples of how this can physically help you, because I've had deals that from the buying perspective, the seller didn't have it, and it blew up the deal because things were going to take months to solve. And buyers walked away. Where if the seller just had title insurance, they could sell the house and not worry about it. Nobody would have to worry about anything.
Think about the houses here in New England. I mean, they're 100 years, 200 years old.
Yeah.
Like all of the transactions that happened in those years, if something isn't jiving, isn't blending on those title searches, and there's title insurance covers that.
Right.
Figures it out. Boom, done.
Exactly.
Instead of, like you said, having to go back 30, 60 days and say, all right, we're not going to be able to close because we got to do all this stuff.
Right. I had that with a builder who bought a piece of land, bought essentially a trailer, knocked it down, rolled it off, however you want to say it, and then built on the land. But the problem was there was something in the title where the person was in foreclosure on the trailer, but something in New Hampshire states that there's like a set period of time where, because he was in foreclosure because of his taxes, if he paid the taxes, he could take over the land again. That he didn't have title insurance, the builder didn't have title insurance, so then our lender was like, we aren't touching that, so they had to go to court and figure it all out. The loan still ended up closing, but it's just, that's like one example of like, there's some weird situations that occur with when you're buying property that's 200 years old, 150 years old, it's just even 60 years old, it's just the way it is.
So tell me about rates. What happened with rates?
They fell finally
beneath 7.
Yeah. I mean, I'm actually glad of that, because this is actually the one time I kind of do want to talk about rates, because
it's a big change.
There's a huge change. Yeah. So a lot of conforming stuff right now is like 6.5 to, it's pretty wild. FHA stuff, if you want to pay like $500, you'll be in the fives. Like
Fives.
it's pretty, and it's crazy that's like, oh my God, but that's just where we've been.
Yeah, we've been jumping up and up and up and up every month, and now it's like, whoa, hey, wait, there's something that's reversing.
Right, it fell down.
Yeah, like people buy.
Yeah,
because who knows what December has in store for us?
Yeah, exactly.
With the Fed rate, what's going to happen?
Right,
likely go up, but like what's
well,
gonna
that's
happen?
the crazy part now is it's like, okay, are they going to go as aggressive because the last inflation report actually showed a decrease? So it's like, okay, are they gonna, they're probably still gonna raise them, but are they going
they want
to
regular decreases?
Correct, right? But are they gonna go aggressive with a 75 bip again, or are they gonna cut it back to 50? Like obviously nobody knows the answer, but Powell. But it's just kind of one of those things where now it's like, okay, like how do you play this now? What's the card down?
Buy. Yeah. Buy.
Yeah, exactly.
buy. It's great. 6.5.
Right.
Under, in the fives.
Yeah.
Buy something.
Yeah.
If in 6 months or 8 months or 2 months, it goes down to 4, it goes down to, into the fives, whatever it is.
Right.
You just refi.
Right.
But like buy, because home prices are still going up.
They are.
Like good homes.
My house has
areas,
gone up in value, even through all this. Like,
and they're going to.
Right.
Because the demand is still out there.
Yeah. Yeah, exactly. And
they just can't afford to buy yet.
Right.
But when the rates come down, that demand is going to be off the shelf.
It is. It definitely is.
You're going to be buying a higher price.
Right.
Again.
Right. And I think there's now a ton of demand for first-time home buyers again because they eliminated pricing adjustments. The government did. So a pricing adjustment, for those that don't know, is a credit score or down payment, or if you're buying a condo, there's a pricing adjustment. Think of it, an adjustment is anything that adjusts for your risk, for the lender's risk tolerance. So if you have a lower credit score, there's going to be a higher adjustment. You're going to get a higher rate. If you're putting less down, you're a riskier buyer. So then you're going to get an adjustment. There's going to be a higher rate. That's gone for first-time home buyers.
Oh, wow.
So in very short order, or in summary, I should say, 620 credit, 3% down, as long as they qualify conventional, will have the same rate as 20% down, 760 credit. It's pretty wild.
Like, that's a great point. Say that again. That's a great point.
Yeah. 620 credit, 3% down, penny you qualify, meet ratios, will have the same rate as 760 and 20% down.
First-time buyers.
As first-time buyer.
Buy.
Yeah.
Because
it's wild.
That's not going to last.
No. And
that's not going to last.
It's going to be very temporary.
It could be 2 months. It could be 12 months. But like, that's not going to last. That's the 2009 first-time buyer, or 2010 first-time buyer credit they were giving.
Yeah.
That's essentially
literally what it is.
They're crediting a first-time buyer through that program. I think that's phenomenal.
Yeah.
I think we need to talk more about that.
Yeah.
That's phenomenal. Wow.
It's wild. And it's been great news. You do have to meet income limits, but it's literally 100% of the area median income, which in Manchester is $130,000. So if you have less than $130,000 on the app, that doesn't mean you have to show all the income that you make, right? You can kind of, take out overtime. If one borrower qualifies their first-time home buyer, right? You get that benefit. And then in high-cost counties, so Rockingham and Stratford, it's 120%.
Yeah.
So you have to make like $160,000 a year or higher to not qualify for that. So like the income limits are it's super high. It's not like, if you make under, I don't know, $40,000 a year,
right.
Like, and it's like, okay, this isn't even attainable. Like this program doesn't even make sense. Mm-hmm. It's not like that at all. Personally, I think the government's trying to compete with all these state programs that are coming out. For instance, Mass Dreams that came out. I feel like they're losing a lot to it. Right. And they're trying to bite back at it and say, whoa, okay, you could take that program and have a 9% rate, but you get $50,000. Or you come with us and you get 6. Like, you got to outweigh that now at that point. Like, okay, like, am I comfortable at what? Like,
just depends on if you're a short-term thinker or a long-term thinker.
Exactly.
Because in the short term, the $50,000 seems good. But in the long term, 6% is a heck of a lot better.
A heck of a lot better, correct. And there's likely stipulations with whether it's Mass Dreams or New Hampshire Housing. A lot of them have stipulations where you can't refi for a certain period. You can't move out of the house for a certain period. You have to sell the house to somebody who's in this there's a lot of hidden writing in those programs that a lot of people don't realize. And that's why we are partnered with New Hampshire Housing. I think we've done one this year. Right, we don't choose to do it because we don't feel like it is the best overall product right now. We'd rather take you FHA, bump your rate as high as we can, and we're going to be at the same rate. You're going to have $7,000, $8,000, $9,000 off your closing costs, and then next year we could just refi you conventional, right? Yep. So there's so many different routes that you can go with it, but it was big news. We got it like Monday, Friday, something like that. It wasn't long ago at all.
Wow,
yeah, they just came out with it. So
love that.
Yeah, it's unbelievable. And then there's like 3-2-1 buy downs that are coming out now, where like you get lender credit on it to help pay for it because you need a seller concession usually, but the money you're going to save at 3% lower interest, if you're in a conventional loan, if you can only get 3% seller credit, it's not going to be able to cover it. So they got to find a way to do it. So like there's a lot of stuff that's coming out to help ease the burden for buyers right out of the gate to at least help them to create demand essentially.
Yeah.
Again.
Well, so yeah, the options are out there.
Correct.
You know, you look at, I have a lot of buyers like, oh my God, I'm not going to buy in these rates. Talk to Matt.
Yeah.
There are strategies.
Yeah.
Right. And what have we been saying this whole time we've been running this whole podcast is there's a strategy to everything.
To everything.
Buying during COVID, there's a strategy.
Yep.
You know, to get a home. Mm-hmm. You know, besides just giving them the most amount of money in the quickest amount of time. There's still had to, but there's strategy. Mm-hmm. There's strategy when buying multifamily. There's strategy when getting a loan, how to make it affordable for you, even though interest rates are 7.5%. Like there's a strategy to make that not the case.
Right. And that's the crazy part too. Like, I mean, we were talking to a guy with a rehab loan, right? Those are coming back where sellers are willing to take it because it's probably going to be the only offer you're going to get if your property's in distress. So
FHA, make an offer if you like the house.
Right.
You know, if conventional, make the offer if you like the house, whatever that offer is, whatever's reasonable to you. For your payment, whatever it is, like FHA 203K, whatever it is, VA, just make the offers.
Just make the damn offer.
Make the offer. Like,
what's the worst that can happen?
They're going to say no and you still don't have a house. That's fine. We'll move on.
Right.
Or maybe we'll renegotiate. Like, make the offer.
Yeah, exactly. And I just think it's wild just the turn. Like, FHA offers weren't even being entertained at the beginning of this year, January, February, they still weren't even being entertained. And now we're talking to FHA 203K people because it's possible. It's just bananas.
And FHA 203K is a construction loan for FHA.
Yes. Yeah, essentially. Right. It's a rehab loan. You buy the house. You have a contractor come in, within 6 months, they rehab it. As long as, you make the correct improvements to the property, you're good to go. So it's that just for those that don't know that one. Mm-hmm. But yeah, no, it's unbelievable. I'm glad the government's realizing, okay, inflation came down. We're not just going to be sticklers on this. They very clearly are hurting too in their mortgage portfolio. So they were like, yep, we're going down, like bump it down. So it's been awesome. It's been a great week, honestly, for us.
Yeah. Well, and if it's a great week for you, that means it's a great week for buyers.
Right. Exactly. So it's been great. I mean, no complaints on our end.
Yeah. Great.
Sweet.
That's awesome. I'm so glad we had Krysta on to get some of the back end stuff.
Yeah.
A little bit of analysis and seeing what's going on back there.
Right.
You got anything coming up?
I'm trying to think actually. No, I think it's just grinding
business
away.
As usual, right?
Business as usual on our end. Other than just like the typical end of year like holiday parties for us. It's pretty much just
Thanksgiving, holiday parties.
Yeah.
The Remax party's coming up.
Nice.
Well, cool. So you can find me, www.findnhhomesforsale.com. Mm-hmm. Also, you can touch base with Matt through there as well. He's got his own profile on there. That goes directly to him. So if you've got questions or want to know 321 buy downs, FHA 203K, whatever, it's just questions like strategy. Remember, strategy is huge right now to get you that into a home. Better than paying 100% interest on rent.
It's very true. That's only increasing. It's an adjustable rate mortgage that you don't get to own.
Yep, exactly. So you can go on Facebook. You can find either one of us at Rich Racine or at Matt McDonald with one T.
With one T.
MAC, not MC.
Yes, exactly. Yeah. And then I'm starting to post a ton more on Instagram. A bunch of like I don't say educational because that makes it sound like it's just dry and boring, but like trendy educational reels. We are making it fun. We're making like, the fun trendy stuff, but we're making it somewhat educational on it. So if you want to learn more about the mortgage process, I'll put that all in the description and all that stuff.
educational virals.
Yeah,
viral
exactly.
education.
That's probably a good way to put it, actually.
So cool. Yeah, check us out. If you've got questions, comments, concerns, what's going on, let us know.
Yeah.
We've got the resources to figure that out for you.
God, yeah. Make sure you subscribe to the podcast on Apple, Spotify, YouTube. We're putting it pretty much anywhere that most people can find podcasts. Make sure you subscribe to that, follow us, ask us questions. As we always say, please, please, please. We love them.
Yeah, if you like it, you hate it, let us know. Either way, jot a comment. And obviously, if you find value in this, that helps spread the word.
Yeah.
If you can share it with anybody that you think might find some value, we'd appreciate that.
Yeah, definitely.
Help grow the business and grow the organization. And the YouTube at Money Matters.
Yes, Money Matters, exactly. And that is why Money matters.